has worn many hats over the year and he's worn them well. Mr. Tuhin Kanta Pandey has been closely associated with the Indian financial sector. Finance Secretary when it comes to policy making, creating value for shareholders when it comes to DIPAM, and he not only took LIC public, he was instrumental in really changing the view of the entire PSU space. In his new role as the chairman of SEBI, well, the job demands the same degree of pragmatism, precision, and vision. And in the first 2 months of him assuming as the chairman of SEBI, he has already hit the ground running. Path-breaking changes have been taken. Markets are feeling excited. So, under his tenure, what will change for SEBI as an institution and how individually he will influence the policy regulation in India? Let's take that conversation forward. And it is my honor and the channel's privilege to welcome the new chairman of SEBI, Mr. Pandey on ET Now. Namaskar, sir. Thank you very much for joining us.
Thank you.
Ab Mumbai aa gaya, dekh karke maza aa gaya. That's what I can say.
Thank you.
The job of a regulator, which you always articulated, are three: regulation, development of the market, and investor protection. Some would say that at least this is a message which some have, that SEBI is not only regulating the market, they're over-regulating the market. Would you agree with that, or that is just a misconception?
I think to some extent is correct. Because I think not only SEBI, I think in general, I would say in many government, because I have been in the government also at various capacities, my feeling is that, we need to not to take a one-sided view of regulation, but a regulation for a purpose. Many a time the purpose is lost because there are alternative ways of doing things. If you want to do a certain thing, there could be a different ways, and we must find out the most cost-effective way, the least destructive way in order to achieve the same objective. And sometimes in a hurry to do it, we take a very unilateral, linear way rather than really exploring alternatives. If we do that, we could possibly become much smarter, and I would say that a smart regulation will be which will balance the imperatives of both the people who would like to be regulated and also the imperatives of what you want to regulate.
So what, to your mind, SEBI has over-regulated where you will now bring in smart regulation? Can you be specific?
Well, I think we'll need to work on specifics on several fronts. I need not give examples because we have to open up different regulations and say, well, certain things, whether they were contextually relevant at certain point of time, are they so? Because, many a time, technology changes, many a time things change. So regulations, they tend to be sticky, normally, unless you really do a spring cleaning from time to time, like, your own household. You would like to, you keep accumulating things and suddenly you find that there's just too much of a space which is cluttering the place. So in this particular, once we are conscious of this and we deliberate on that and decide, can we do more with less? And if we have that sort of approach, and I think if you are there in your own organization or in any companies, they would also like to do the same thing. If you have to bring in efficiency and effectiveness together, we need to be mindful of the cost of doing business.
You've created magic at DIPAM, and then you were involved in the policy making of the budget. What magic Tuhin Kanta Pandey is hoping to create at SEBI? Because they say that you're the man with the jadoo ki chhadi, magic wand. How would you move it?
Well, I don't think that's really the correct way of putting, in fact, my style. I'm an institutional person. I believe in system building. And to me, these systems are built over a period of time with a particular context. And SEBI, for example, has played an important role in the capital market development journey of the country. Today, this market is fourth largest in the world. Very soon, we will also, many times, at one point, we also overtook Hong Kong also. So the question is that, there are different people who have worked there. Before me, 10 chairmen have come. There have been whole-time members. There have been SEBI staff. And there are some who have really joined as a very first staff and still, just either retiring or retired. They have played an enormous role in its development. So what we need to really do is to understand the current context. I see India has lots of opportunities at this moment. Next 20 years, the kind of growth we have, the stability of policy, the fiscal consolidation that the government has attempted, the repaired balance sheet of both corporates and banks. So this, and the talent pool and the demography. So all these things which are there are creating a very positive environment despite very strong global headwinds. So it's not a very, there was a time when it was a very salubrious global situation. So therefore you could really notch up 8%, you could touch even 9% for some while because there was so much of tailwinds that you have. Now that we have headwinds, we do have to say, where is our comparative advantage? And our talent pool is there, our stability of policy is there, and we welcome both domestic and foreign capital. We welcome the issuers who come to a lot of enterprises there. Those entrepreneurs can build up large companies. They need capital. Those capital can be accessed. A lot of venture capital funds where, it was abroad. People were saying that they're funding from abroad. Why can't our AIF industry also fund many of them and started funding because, so much of funds are required also to try out new innovative ideas. Different risk appetite, different instruments, and different, I think, degrees of investor protection. Because investor protection which may be needed for retail or small investors in a particular segment may not be perhaps to that extent necessary in the riskier segments where the risks are, the people who are like accredited investors, if they are really to take the risk, they can take a larger amount of risk. Of course, everything should be on a system-wide risk where we should be able to do that. And for that, we have to work very closely with the other regulators, especially RBI.
One of the first decisions, Chairman, which you took was relaxation of the threshold limit for FPIs. That is a clear indication that SEBI is open and welcoming more foreign investment. What was the thought here, and do you see further relaxation coming?
We had the threshold criteria arising from PN3, and there was a concentration criteria, which is 50% more. If you have more than 50% in a corporate group, the concentration criteria remains the same. And the threshold criteria we have in tune with, the market development which has taken place has increases to 50,000 crore. So we haven't seen too much of an issue around it. But of course, it is like saying that if you really restrict certain things, the people will start operating at that level. Why should we? We need capital at this point of time. So therefore, we said 25,000 crore become 50,000 crore. So more thing can come in. We also have to see the limitations and the problems on the other side. So it's very important to engage with FPIs. They are a very important part of our growth story. FDI, FPI. Today, to some extent, it is difficult also to distinguish, and I believe DEA and RBI are looking into, and SEBI also, re-looking into that whole FEMA chapter in terms of schedules, and some of it can be reworked in terms of what we say as an NRI investor, what we say as an FPI investor, and so on. But what is important is the foreign investments is important. Domestic capital is also equally important. Both also need returns. So therefore, real economy must also perform, because returns cannot be generated in a bubble. It has to be, grounded in the real sense. So we think that, a potential of India, which is rolling out. And therefore, the financial industry has to both support it and also be supported by that growth. So when we have done engagement with FPIs, we also do understand what are the practical difficulties of some of it that we might do. Secondly, the engagement process itself creates the confidence. Third, the co-creation is possible. Whether we talk to the FPIs. Today I had met Brokers Forum here, and they have also very important suggestions. And really they are doing it very creatively. So there is no reason for us to just keep doubting people and all that. I think if we allow the people to bring their thing honestly and integrity, they themselves will bring a very constructive solutions, meeting the risk objectives of regulator and bringing the practical thing of how to implement it. So this particular consultative mechanism at different levels is something which is a very important feature of SEBI's work process. SEBI has now we have a regulation, how to prepare a regulation, which means that if we were to do a regulation, we must consult, we must have a paper, we must do a committee process, we must take public consultation. My only thing is, and I tell SEBIites, please do it very honestly, intently, with a view to listen. So these consultations should be real consultations where we find joint solutions, pragmatic solutions, and there we will find then, how we can achieve the same purpose with less obtrusiveness, more finesse, more precision, and not like a, sledgehammer approach, but with a surgeon's knife.
So, Chairman Pandey, making a very interesting point, and I can certainly see a departure in the SEBI communication, which is that you are more open to dialogues, more open to feedback. The trust factor is a bridge which you want to build between the participants and the intermediaries, and SEBI is all for innovation and all for constructive criticism also, which regulators are not open for, but you're open for feedback and constructive criticism. So you're really rebooting the SEBI's approach, not only with market participants, but also in the role it wants to play.
Yes, true.
Okay. I'll talk about your US trip. You've just come back from US trip, and I've been told that there were very constructive dialogues with foreign investors. What was that one feedback which you agreed with, and what is that one feedback where you said, I've got fingers on my lips?
I had very good meetings in Washington, D.C., New York, Boston. Also had the occasion to meet, in the spring meeting with IMF and also IASCO, which is the international organization that security regulators have. And everyone, I think the people were really appreciative of what India is doing on the security market front. But more importantly, on the FPI side, I think they welcome the engagement process. And not that this engagement process has been initiated when I have joined. I think there has been an FPI outreach cell, and they have done 2,000 meetings. They have done lots of simplification. But sometimes what happens is that, you also need to give an overall context of the engagement. And that overall context, when you say that we want to co-create, we also want to look at the pain points, and we look out to honestly deal with them, and we've also open to suggestions. I think there a lot of creativity which may be lying dormant may come out because we actually openly seek them, honestly seek them. I think that is one particular feedback I got. The second feedback was actually that everyone is looking very positively for India. And they're looking at both India as an opportunity, even with all that is happening around the world. They are looking at opportunity. And everyone is so appreciative of the talent pool that India has. And many of them, very top banks, they may not be doing a banking operation here, but they are running their global operations from here. Somebody is having a 20,000, workforce here, 40,000 workforces here. Just very large offices, 6 offices, 8 offices. And they are running, and they're putting even the global heads here, they're very senior positions, up the chain. So this is the kind of a feedback that I got that, so when we have so much feet on the ground, then obviously, you are able to communicate. If only we are able to create a more welcoming environment, if we are able to, sort of procedural issues, if we are able to speed up the things, and many of the things which we have done, they are deeply appreciative. They are deeply appreciative. If we can accelerate it through a better, and I'm very hopeful governor is there, and we can actually sort out many issues if we have any inter-regulatory issues with a very fresh mind. So those are the opportunities we must take on board. And I think definitely we have got a brighter future for capital market.
Can I say there is a jugalbandi at place now? New RBI governor, new SEBI chairman. You both are good friends also. You both know each other also.
That's true.
So the jugalbandi would be at play. Inter-regulatory issues are not going to be present now, and that's history now. Whatever they were there, two friends will talk
I
it
don't
out.
want to comment on anything in there. All I can say is that the situation which is relevant now, I think there are many things that we see things in a similar way.
Okay. One of the demons of the past is the word P-note. Now, SEBI has gone on record and has clarified again and again, but this keeps on coming up that what is the stated policy of SEBI when it comes to P-note? Every time market goes down, a rumor comes from here and there, P-notes. What is SEBI's stated policy on P-note, and are you welcoming that instrument, and will that instrument continue to last?
I think that is already past the date. It used to be such a thing, P-notes used to be, is a past issue now, because it used to be 60% of that. Today, this is what is called ODIs, and they're less than 10%.
So can I say expiry date P-note ki khatam ho gayi hai? It's time to move on. But
and ODI will have the similar thing as the, whatever the, regulation for FPIs. So there will not be any less thing for ODIs. They are equally applicable. So I don't think that is in fact of any significance today, this issue.
The other pillar, important pillar for SEBI is of course investor protection. And SEBI has gone on record and has claimed with data that 90% of the retail trades in India, they hit losses. Is SEBI against retail trading? Is that a message which the regulator, which has been trying to drive? Would you like to take that forward?
No, not at all. In fact, the retail is our strength. If you see that you have 49 million in 2020, and now we are 130 million. It is not the number of institutions, it is the number of investors, unique investors. So 130 million. So they've, gone almost, from 49 million to 130 million in 5 years. So these are our strength, and we have got, in fact, in IPO, there is a certain proportion which is reserved for retail. Retail has a window even in OFS. So the retail is a very important story for us. Now, what was the problem areas which you are talking about was a very small part of the F&O market. And that was the index options on the expiry day. Now, typically, it was like, was and is like perhaps a casino. Like, what are you using the F&O for? You're using for market depth, for liquidity, for price discovery, for hedging. None of these things are getting served there. If you are going to, take a option on the index 15 minutes before it's like, because there's a very small premium at the time, they're almost there. So therefore, it's like, putting some money in a slot machine. So that kind of activity is not really attunable. So because it's like, getting addiction to some kind of thing. And secondly, it's our also important duty to put out data. Of course, we have not done. Trading is still going on. If you really see 2 years, if you compare with the 2 years, it is still, I think, possibly 44% up, the notional interest. The premium is also up 15%. But if you take a one-day data, of course, it is down by 34% and the premium down by 15% after we took those measures. So we need to have a balance on this. I mean, we have no problem in index stock options, and we don't have problems with futures, and all those things are there. Some problems also are there on systemic basis, which we also discovered while we doing the analysis, and that is all we have put it out in our position paper. We've invited comments. We've received more than 800 comments, and the people have actually commented. We said that whether we should, based on a certain data, we propose certain limits intraday, end of the day. We also propose that there should be delta while calculating, which is a reasonable thing to do because you can't compare apple with oranges. So in a way, it is a more systemic improvement of that market we are aiming at. Of course, people will say, if they say that, look, these limits are not in thing, we need a greater thing, otherwise, the delivery and the price discovery issue will be lost. So those points we will take it on board because many of those points have come. But in principle, those things are important. All issues are important. And that position paper was also done with the help of experts. So it was not a unilaterally prepared by. So I think that this has taken a debate forward. We'll take a considered view. The whole precise process by which we brought in the paper and the people are commenting, everyone can comment, and so many comments have come. So we will take a considered view on that and move forward. But F&O market is an important market.
So there is no view in terms of relaxation, anything also, can I say that as of now? Whatever tightenings were done in the options segment, would you be considering them, rolling them back also?
At the moment, what it is. And then we will, of course, in fact, including, for example, 2 days of expiry, weekly expiry, So, and then there were some exchanges, who were going back and forth, and we said that, no, these are the days we fixed.
Everyone is curious to know that SEBI, in order to protect the margins when the market volatility is high, they impose margins which are on a rolling basis. They go up, they go down, depending on the price action and the volume action. What is the criteria in place? Will that criteria change? Because this is something which, in a sense, will have an impact on depth of the market as well as the volume of the market, depending on the margins which SEBI imposes or SEBI rolls back.
I think some of these are good practices. And in some sense, in an extremely volatile situation, these are bulwarks. We have to see that market integrity is extremely important. India is one market which didn't even stop even for a single minute, during the COVID process also. There are very few markets around the world which did. So many FPIs could exit, and people recognize that. Also because, that the depth of the market allowed them to exit. In many markets, they couldn't. If you have a fall so much, you will make a huge losses if you were to exit. So, but India could give that exit. So therefore, I think that itself also creates a confidence that if you have an ease of exit, then you will have more entry in future. Because anybody who wants to enter, the first thing he says is, can I exit at the right time? Liquidity is important. So we have to keep in mind that every time there is any volatile situation, we are able to deal with it. So margins are a very important thing. Margins are maintained at the client level, not the broker level. That's an important thing. The margins are up to the clearing corporation, lien to the corporation. That is an important thing. We have a doubling of the settlement guarantee fund. That's an important thing. So we have these help the market integrity. And when we had this April 2 event and others event, and we were closely watching, we didn't have any exceptional margin calls. So we handled the situation in a fairly smooth manner. So volatility also is able to handle, because that also creates a confidence. We are mindful that we have this 130 million. So therefore, we have to always create that confidence that the markets are well functioning, and money is protected. Of course, there is a market risk, and that itself is an education which we are trying to do. And there, I think we need to do a lot more. Both SEBI along with our institutions, ecosystem, we need to do more of awareness because there's so much of information out. Now, if you are not really getting into this information, why isn't that our young people who are getting into that, getting a little way ahead, even if they just, do some online search, they can get a much better information about them. There is no need to go and get fixed on some influencer who may be, doing at somebody's behest and trying to pump up the stock. And therefore, we are trying to say, okay, there are elements who are going to do, pump and dump strategy. Now, recently we also have got into, the spoofing issue, whether people have spoofed. So our people, our SEBI people, on surveillance front, on this front, on supervision front, will continue to be very aggressively involved. We'll do that. We'll do whatever that is necessary. But I also appeal through your channel to the investors that we be more mindful. One is that, not to get into this kind of a daily business or, get it down and get it out. You have to have a long-term perspective. In my opinion, a more balanced perspective on the assets. Add even debt to the equity and so on, because you have to meet with your own asset allocation in a nice way. And the second thing is also when you are investing in particular stocks or something, then I think they should do more of research. They should get into that information. The public disclosures that we have intended is exactly meant for that.
I must put it on record that one of the big reasons why Indian markets are trading at a premium to global markets is thanks to the efficient regulator we have. I mean, that is a premium which is a hidden premium and which always is captured in the P multiples of Indian stock market. So thank you for this, regulatory framework what we have. I'm going to take a leap from your answer, Chairman Pandey, which is that you are open to expansion of the market, which means more and more products, more and more intra products would be there. So are we looking at the derivative market in India expanding, new lists and new names would be added, and that list could be a long one now, a year from now, 2 years from now?
Certainly, I think the new products need to be added. Energy futures, for example. I think we can look at it for our energy markets and others. There's some area, there could be many other products. But then for every product, you have to do a proper research. The market participants have to come together, exchanges have to come together, develop something, have a risk framework, and we should be able to then prepare regulations around it. I think, for example, REITs, InvITs, SM REITs, these are the kind of things which have really come and open another opportunity for the people to invest. For example, otherwise, if you were to invest in real estate directly, and which may be far more illiquid, but you could, if you have a more tradable REITs, etc., you can actually invest in real estate in that sense and in a fairly liquid market. So InvITs have come, and a lot of infrastructure funds, pension funds, and others would be very much interested in long-term funds, would be interested in of specific instruments of this kind. So there are a variety of investors with variety of interest, and there should be a variety of instruments to suit that interest.
Let's talk about the mutual fund industry, the grand success of India. SIP sahi hai, the kind of, I every time I go on television, I said that, look, this is the market which really belongs to the Aam Aadmi, because it's the SIP investor who's really enjoying the benefits of India growth story. But mutual funds have some concerns, which is that as they are growing, their total expense ratio is being questioned. As they are growing, they're getting more and more regulated. What are your thoughts on the way how the entire total expense ratio would move for mutual fund industry as they're growing?
Again, there are two sides of that. There is an industry viewpoint. There is also a viewpoint from investors. Mutual fund industry is very important from systemic point of view, as a system as a whole, because so many investors are into it, and secondly, so much of funds are there. Now, obviously, we have to really see, obviously, that, how that market is well regulated, well managed, so that, this is beneficial for both investors as well as the issuers. So things like total expense ratio, right now we have an upper cap, but Somebody can say, oh, everyone is crowding around upper cap, but there are possibilities. For example, you have 2% for debt securities, but what is being charged is much less. We have only prescribed an upper cap. So there is a competition there, and the competition can do it. But in my opinion, also, there has to be a reasonable charging also. Because sometimes when you try and, put it to the rock bottom, then there could be other risk emanating. So we have to see that, cost must be reduced, but cost also must be recovered, whatever cost is there. So long as you are efficient, okay, you can reduce the cost. But there is a minimum that you got to be paying, because otherwise it doesn't work.
So you're not against mutual funds making higher profits? I mean, it's not SEBI is really concerned about the profits. No,
I would say that there is a competition.
Okay.
And the people will actually, we should allow the competition to do. And upper capping is something which which I'm not, I said it can serve a purpose also, upper capping. But within the upper caps, the people can actually play out in competition and see how they can reduce the cost.
The SME market and the way SME stocks go public, the way they spike on day one, the way companies are getting up, is that a concern and a genuine concern? Because this is where the retail investor comes in. It is not an institutional dominated market. Would you be looking at that market seriously? Because there is definitely froth, Chairman Pandey, there in that market.
The SMEs are also, there's a relatively lighter touch regulation, precisely because we thought that, the SMEs, which is, so much of important part of Indian economy should be accessing capital market, should have ease of access will be there. Of course, we have been watchful, and if we have seen some of the points where certain tightening was required, the tightening was indeed done in terms of bringing in conditions like operational profitability in 2 out of 3 years. Also saying that the funds cannot be redeployed only for the purpose of repayment of promoters' loans. Also trying to the general corporate purpose, you cannot spend more than 15%. These are the kind of things which were necessary and which were also brought in initially, because when we thought that it was being misused. But there is also a lot of responsibility of merchant bankers of how they are doing it, both in terms of reducing the costs of because sometimes they have to pay the cost of raising money is a bit too high. So that also for them, if it could be 15%, 17%, so it becomes onerous. So I think that is one point which needs to be seen. Then how we will be watchful, of course. I mean, the question is that this is on the SME board and this is on the main board. And we are saying that, if you have to graduate, that's one part. The second thing is whether the SEBI itself will, look at the IPOs, and which we have delegated to exchanges. So we have to see, how the exchanges are doing their jobs and how they will be watchful of that situation. But what we have to see is whether statistically, data-wise, whether it is an egregious thing, kind of a thing, or it is more widespread. If it is an egregious kind of case, you can't really fix it with regulation. It is a supervision issue. It is a surveillance issue. Because regulations are there. Now, we cannot simply increase paperwork and regulation on the ground that, 1 or 2 cases have gone wrong. Because that even even if you make the regulation so tight, still, people can slip through. If you have if you have a greed as a thing, if you really want to have a fraud, the frauds can be committed under the most watchful of conditions. And even if you put CCTV all around, the people can still sneak in. And here we are talking of businesses. We cannot have, we cannot be in the boardroom, every boardroom, we cannot be doing this, because then we will be doing tremendous type 2 errors. So while we should avoid type 1 errors, where, because of our non-regulation, a lot of risky thing we allow, So we should avoid that. There's a type 1 error. But we should not also commit type 2 errors where we should over-regulate only because, some cases, 1 or 2 cases, 3 cases have been caught. Then in that case, what will happen? Every surveillance action will end up in still tighter regulation, which is not the case of surveillance.
Yes. So my last part, one question. There's an impression that SEBI is having some issues with the NSE IPO. Every time when they come up with clarification, there's a new list of perhaps clarification goes back. What is the status with NSE IPO, Chairman Pandey?
So the NSE IPO, I think there has been some discussion on these points. As you rightly say, there were some points and they have replied. There are broadly 4 issues. 1 on governance, 2nd on technology, 3rd on clearing corporation, 4th is on litigation.
If they meet all 4, will they get a green light?
And settlement of the litigation. And these 4, I think with a very intent to resolve and with the intent to actually make IPO possible, we should work out a solution for that.
And you see it happening that sooner than later?
I think so, because I think we will apply our mind on that matter, and subject to satisfactory resolution of that, we should be able to see it through. But our intent will be to see it through.
My last question, more like a personal question. So are you enjoying the Mumbai Pav Bhaji more or missing the Delhi Chola Bhatura more?
Well, neither I was taking Chola Bhatura there, nor I have taken Pav Bhaji there. I think I have to try both.
Try both. Well, I look forward to that engagement where we meet not over chai but over Pav Bhaji in Mumbai. Thank you very much, sir. Good luck and thank you very much for joining us.
Thank you.
Thank you very much.